What's going on, everybody? And in this video, we're providing a state of the market and stock picks for December 9th, 2022. So if that sounds like something you're interested in, consider subscribing, as I do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. Now, let's see, what other new news do we have? Not much. Again, there's a lot of stuff that's not going to be very pivotal, and something you can tell, even though we had that sell-off from the banks earlier this week, kind of what's happening is the market doesn't want to sell much lower than it currently is, sitting roughly around that 39.50, and the floor roughly being around that 3900. So it's keeping a tight range. If it does anything, I think tomorrow, I think we'll sit flat or start to sell off back to that 3,900 mark. Ultimately, I think what's going to happen is we're just setting up for next week. But an interesting data came out today. There was jobless claims today, and it jumped, rose by 62,000 over expected. And now this has been the 8th consecutive week of more people unemployment, and people are finding that they're losing their jobs, and it's being extremely difficult to find new jobs. And so we have to take this in consideration into playing a lot of the thesis in which I've been leading up to this point, that everything is feeding into this. We are, again, our savings rates is one of the second lowest in history. And understanding that, if you look at the housing industry, something else I've been talking about, it's very different in the area that you're in. So you may not be seeing it in particular, but if you look at the trend-setting California, Nevada areas, you realize that houses are sitting on the market for a very long time. Roughly, I've typically been looking just around random states and stuff that I am particularly interested in real estate. And I've even noticed that a lot of houses are starting to sit for 20, 30 days, and they're getting very few views. Now, these trend-setting states, you have to keep an eye on and really see what's going on, because it's eventually going to be the same way. And the thing is people are getting smarter. They are realizing that these things are occurring. But you also have to remember that there's still there's a lot of spending going on, and we're seeing that in the data. And so there's a lot of misleading information. People are just in this almost hopium phase that things are just going to magically fix themselves, when in fact things are in extremely bad state. And I don't know if the general public feels that the government's going to bail them out, or what the case is, but things are just not looking good. At what point, again, like I've reiterated multiple times, does the consumer break? Right now, you have a lot of people that are on some big severance packages, so you're not really going to again see the effect until roughly probably around February, around a normal decline cycle. You're going to see essentially roughly right after big tech earnings. Funny how that works, but nonetheless, this is when you're going to start seeing a lot of this stuff unfolding. Now, if you want to start comparing it back to 2008, right? Like there was that particular the housing market died out, essentially, not only just because anybody could get a loan, but it was changed, right? The rates were changed, and it just essentially caused a collapse of everything. This is a little bit more different, right? You're going to start getting. I don't think you're going to get a massive flood of bankruptcies, but I think they're going to trickle out. You might get a massive stream here or two of bankruptcies across the board. I don't really quite know how that's going to play out, right? But the situation is a little bit different, right? Every situation is similar in aspects and different than others. And so this one, again, you are pushing the consumer to the point to where people are already starting to take. People are hacking. Even if you look at the housing industry, people are hacking, $40,000 off their sell price, and they're still not selling. And these are in the trend-setting states. So you have to understand where we are headed at, and what we're looking at is that it is we are waiting for this event to essentially bring down the market is what we're waiting on. Right now, there's a lot of hopium. So if you go off of what's based off of what headline news and everything, that things are okay, everything's going to be okay. Again, the market does, I've talked about this many times, the market does try to price things in to an extent, but once it hits a level that it feels like it's priced in, it just starts going back up. It doesn't mean it sits there and holds. And so that's what we saw throughout this year when I've been talking about rates and what was expected. We'd bounce around, it's 50-point basis move, we'll bounce here, 75-point, we'll bounce here. So that's what we kind of did all year. And so now it's more so where do we go from this point? Is inflation finally taken care of? Right, we won't know till next week. God forbid we hit 8. We hit 8 next week. It's just going to be mass panic, and it's going to be bad. But the housing industry, going back to the housing industry, once that unfolds, we don't know how it's going to unfold. We're going to get this massive wave of bankruptcies because people just can't pay their mortgage. It's not going to be all at once because some people obviously have more assets than others. So it's not going to be like overnight click and then, shit's just bad. And so everything changes like in 2008. This is going to be a little bit different, right? It's going to be how consumers are going to vary. So this is why this is going to be a little bit played out a little bit differently with the bankruptcies and destruction demand that we're already seeing. And again, when you're looking at what's going on with housing and people trying to sell right now, and understand that and it's also there was another report just the other day about people being over their head, being underwater with their mortgage loans, because a lot of people are taking HELOCs and stuff trying to improve so they can sell it, but now realizing that you're reaching the back end of this thing before this thing really starts to go under. And then when it starts going under, that HELOC you may have took out on your house, you're not selling it, and then you're pretty much just going to whoever will buy your house. And so you're getting to that point to where you start getting into a landslide that's, I just got to get rid of the house at this point. And so where does that lead, and how quick does that happen is what I'm looking at, and what I've been trying to gauge. Again, people don't buy your everyday supplies on credit card, right? Unless they really need it. You don't go out and buy groceries on your credit card unless it's really necessary. And that's what we're seeing. And so again, you can look the other way for so long, and that's what the market is kind of doing. And you get hopium in turn. So the market will have pumps, right? And the market will pump, especially at times like this. Hopium is potent. People are tired of seeing the bear market junk and jazz, and I completely understand that. But this bigger catalyst needs to unfold before we can actually do that. And whether that's with even the Fed actually pivoting, which I don't believe they're actually going to pivot for a couple more months. I believe they're going to come in at 50 and then a couple 25s, kind of like how it's already being projected. But you still have Fed members saying 75. If we come in at 75, that's not a good sign either, because we're seeing what's happening with these rate increases. And so if we come in at another 75, I think you're just going to take out the legs of the consumer, even worse than it already is. You're taking them out of the hips essentially at that point. So if not the chest. So nonetheless, things are in a really, really bad state. And so again, we've taken essentially our point of interest right now, which was inflation, and moving it to the consumer and seeing how bad essentially the consumer is sitting right now. But you still have to be mindful that inflation can creep up, and then that's going to overtake the consumer again. And then that's just going to absolutely destroy consumer. And then you get into deflation to a really bad extent, to where then the consumer is so fearful, right? And you got tons of people that inflation is bad, that they're not going to even go out to work, because what's the point of going to work if you can't afford to even pay for the gas in your car? So there's just too much going on. And again, people are going to go out and buy a house because they just can't, either one, they don't have or are afraid of losing their job, and they can't qualify for essentially the mortgage, the 30-year fixed mortgage rates that are out there right now. And so you're getting a lot of that with the rate increases, the job losses. You're seeing that. And so, yes, there may have been record sales on Amazon, but people are not going to the store anymore, right? Like, I got to pay for gas. Why would I do that? I just buy it online on Black Friday or Cyber Monday, whatever the case is. So there's a very misleading story here. And I think people grasp on, oh, big sales, the flash in the news. Let's advertise that a little bit more in the media. Things are great. Things are great. Things aren't as bad as they seem. When in fact, you only get half the story, right? Like, people just didn't go to the stores. They were going to spend the money for the gas to go. But if I can get 40% off and just buy it online, I don't have to stay in line, and I can save money considering what's currently going on. And I don't know when it's going to stop. So excuse my rant. It is only Thursday, and I'm ranting for quite a bit already. So I just wanted to get that out there. There's a lot of information, especially the housing sector is extremely important to be watching. Because, right, this is one of our basic necessities. And when you're starting to talk about a lot of people potentially going bankrupt because they can't afford their loan anymore, and having HELOCs and everything on top of it that they've taken out to hopefully sell their home, and now they can't sell their home. So now they're just going for, whatever money they can get to liquidate, so they don't so they're not completely wrecked. So being said, this is where we are. So technical wise, again, I don't expect much. I wouldn't be surprised if we hold essentially this 39.70 and stay between that and the 39.15. So I wouldn't be surprised if we held here until next week, until closer till Tuesday, where we get inflation, and then that will dictate which way we start going. Again, maybe inflation is good. We might pop up a little bit more, and only find out that maybe, hey, the Fed say, well, we can take another 75-point basis move. That's going to drop us. So there's a lot of scenarios, and I want to talk about it a bit more. I'll go more into detail in the weekly update, but there's just a lot of different scenarios that can play out right now. And so there's a lot of what ifs, and it's just not the case. And institutions don't want to be in a what if scenario where there's just too many what ifs. If it's pretty, well, can either go this way or that way, 1, 2, maybe even a third one, that's okay. But when you start talking about, man, there's so many different possibilities, and it's heavily reliant on what happens with this report, aka core. And then if that's okay, well, then where is the consumer, right? And how fearful are they to come back? And you have to have demand. Without demand, there is no markets. So you have to be mindful of that. And that's completely getting obliterated as we speak. And you're seeing that. Again, look at trend setting, not where you're at. Maybe your area is good, and that's great. But you have to understand there are trend setters out there. Find out your trend setters and see where they're at. And right now, they are not doing good. So we have to be mindful of that. So the dollar, take a quick look at the dollar. Again, it's below the 5, which is great for bulls. But again, I think you definitely don't want this getting closer to the 2, because you got a major support sitting here at 2, and then that's going to pop this dollar right back up, which could lead into everything. Maybe we do get lower inflation that kind of helps with us sell off of the dollar sell off to get a pump, finding out that we got 75-point basis move, and then this thing rockets back up. So again, why try not to use, I use both because technicals do help, but you have to understand, again, events will override any technicals. And technicals, again, only have about a 65 to 75% accuracy level compared to they once were. Because again, you got to remember, you're fighting against the algos now, and so the algos will go off of headline news, and so this is why you're getting hopium pumps and everything else on top of what's being out there in the headline news. So Bitcoin did get a bit of a pump today. I believe there was news on some more levels. I don't know exact facts about it, but you have to look more into it. Is some insurance, I guess, got clearance to allow Bitcoin as being an alternative for their insurance or something like that. So I don't know all the details about that. If that's something you're interested in, suggest you follow up with that. Let's look at Tesla. Tesla's in a bad state, and they just announced today that the CEO, I guess, Elon might be stepping down. Something they talked about before a couple of months back about his successor and somebody that might be taking over. I guess there's a guy they're bringing over from China that runs a China factory, I believe, that he's going to be running essentially the Gigafactory in Texas. So if that's the case, people are saying that this is going to be the guy that's going to be his successor. So that kind of caused Tesla to start selling off, but it is holding. Again, if that news does come out that it's official, that could be bad for Tesla. I think that Tesla would sell off pretty heavy for that. And it could be a positive too, because then now you have a full-time CEO as opposed to someone that has wearing multiple hats. So that could be seen. I think it would be more bullish in the long term, but short term, it's definitely not going to be good, I don't think. Again, it's really not my opinion. It's really how the market's going to interpret it and something I try to abide by all the time. So we'll have to see. But currently right now, it's again holding roughly around this 170 pretty well. Again, wedge break technicals, it's just not playing out unless this thing really starts bouncing from here. Again, we're going to get into earnings mode too, so you have to realize that's right around the corner. Maybe that's when the successor is officially announced. Who knows? But we're really close to getting in a rally mode, so I want to watch that. Apple, again, I think it got money flooded to it because of the Tesla news today. Again, still roughly holding around this 140. I would really like it down here in this zone, this 136. I want to buy Apple if it does drop into here, and then try to ride this up, and hopefully it breaks out from there. I'm hoping this actually doesn't do the reverse and actually break down. Again, that really just depends on what happens next week, kind of help dictate that. But if we do fall into here from next week, by the end of next week, if we're in here and holding, I think that'd be a positive sign into a rally that we could potentially break out. Again, that rally, very short-lived. I'm not staying in that rally if there is a rally, because I'm predicting that, what happens with this whole housing thing is going to get a lot worse. And then you're going to see that unfold when it does happen. BA, again, having a real tough time breaking the 179 here. Again, this thing needs to break that back below the 169 for this thing to start really flushing. So really kind of watching that there. JPM Bank, same thing. They need to break 130. Break 130. This thing come all the way back down to 120 pretty easily. Again, it never back tested. It just parabolic here. You don't want this. So you're looking at least potentially around the 120. See if we get a pullback to there. GS, again, banks pretty much look all the same. It's on a support right now. The 556 breaks that, potentially looking at the 329. So watching that zone there too. Though Goldman Sachs does a lot better as far as the banks do. So we'll have to see how that plays out moving forward. BAC, again, absolutely wrecked because of what happened. I think it was Tuesday. With that announcement, negative GDP announcement does not help their bank or their stock. So I think this thing can continue down to the 229. Again, if we get any bad news next week, it's only going to fuel this further down quicker. So market's really been weighing on that. Again, volume has been really low just because of, again, holiday season. So this is a normal setup. So just waiting to see what happens moving forward. But yeah, that's pretty much all I got. I know I had made a big rant towards the beginning part of this video. Again, I think there's a lot of stuff you need to be paying attention to. Again, there's a lot of misinformation or misdirection in particular about where to be looking and what's actually going on. And I realize a lot of stuff is not adding up. So stuff is this bad and this blatant. You need to be paying attention to it and hopefully stashing cash and waiting for when the opportunity does arise. So again, not financial advice. None of this ever is. That's just my thoughts, my opinions. Again, everybody has an opinion. Take it for what it's worth. So that being said, go ahead and drop a like button. Till next time, I'll see you guys later.